everybody. Hello, Facebook. Thank you so much for joining us today. We have some great information today on down payment assistance programs. So, joining us today, of course, is broker Chanel Lang. Hey, Chanel, how are you
Oh,
doing?
doing good. I'm excited.
I
What's
know, I know, because we get so many questions and so many people asking about how can I get down payment assistance. So
Yes.
we have brought on Mr. Walter Patton with Lanmac Mortgage to tell us about two of their new programs that they have for down payment assistance. And these are going to be really great, and I can't wait to hear more about them. So, Mr. Walter, take over.
Thank you so much. As friends of you guys, this is an honor to be here to help educate the public because we're all in this together when it comes
Mhm.
to helping others to try to get into the home of their dreams. We know sometimes it can be difficult for some people to stockpile enough money to
Yes.
pay for the down payment. And so it was disappointing to me as a mortgage loan officer to have to turn people down because they didn't have the down payment. They had the monthly income, but it was just hard for them to save up
Yeah,
for
it's
that down
hard.
payment.
It's
Um,
hard at these price points where we are with this market nowadays to have 3 or 3.5% minimum down. So you're looking at least $6,000, and you need what, another five, six, or depends on your price point. I mean, you need anywhere from $10,000 to $15,000 for down payment and closing costs. So, there's a lot of people that can come up with a few $1,000s to cover their closing, but trying to do the down payment too, and they have great jobs and great credit, you just don't have that much cash. And so, Landmac is offering something that will definitely help them out.
I wanted
right.
to jump in here too, guys. Like, I
Yeah.
know a lot of people, like we say, have, work. I know some people that work really hard just to get the credit part to match their income and pay off things. And they spend a couple years just aligning that credit part, and then they don't have that saved. So a lot of people like, hey, I know that my credit is here. What can I do? So that is often the first thing people start with how much do I have to pay down? And you also have to have so much liquid for other things associated with purchasing a home, like the home inspection and appraisal. So, Walter, I'm sorry, it's your turn now. Tell us about what you got to offer.
Well, I really want to reiterate what Amy just said. The ultimate goal is to get the homeowner to closing day. We can all breathe once we finally get to closing day.
Mm-hmm.
But for the homeowner, um, part of the money that they have to cash to close is what we call it. Part of that is the down payment assistance. You still have to have funds for prepaids and also the actual closing costs. And we'll talk about that a little bit later.
Okay.
All right. So you wanted to get started with, I'll pull this slide up here real quick. Click the right button here. There we go.
So I work with Lanmac Mortgage, and recently we were able to team up with one of our mortgage lenders to offer a down payment assistance program. Some of the things that I want to bring out about both programs is that who would be a good fit for these programs? Well, the answer to that is first-time home buyers or non-first-time home buyers are eligible for these programs.
Oh, so
Um,
you don't have to be a first-time home buyer then.
no, you do not. These
Okay,
programs,
that's great.
yes, these programs are for everybody.
Okay.
Um, Credit-worthy borrowers, you have to have a minimum of a 600 score. So you have to work on that credit if you're below 600. But and I'm willing to work with you to get you to that point. But the lender does want credit-worthy borrowers of 600. And then these are FHA loans right now. We're not doing conventionals at this time, only FHA. And also, these loans are good for low to high income borrowers. There is a little bit of difference between the two programs, and the two programs are the 3.5% forgivable, and also the 5% repayable. So when I keep saying two programs, those are the two programs that I'm referring to. So who is not a good fit for these programs? The answer to that is borrowers with high debt to income ratios. You might hear me say out the acronym DTI. And once again, that's debt to income. And so basically we're looking at the debts that you have on your credit report and how much of that is taking up your monthly income. So we typically want you to be below 43%, what we call rear end debt to income ratios. So if your total debts are less than 43%, normally you're a go for these types of loans. Also, borrowers who don't have additional money for closing costs and prepaids. So once again, these loans will only help you primarily with the down payment portion. However, there is a catch to the 5%, and I'll talk about that in detail in a minute. But to help with the closing costs and also the prepaids, your realtor can ask for seller concessions to help pay for some of those. And also you can get gift funds. And those are just two options to help the buyer who need help with the closing costs and prepaids.
Okay. So generally, because you sound like you are all together with your mortgage lender term. So generally, the FHA generally is what first-time home buyers use in our area, and that's generally about 3.5% down. So what you're saying is this program can assist with that, and seller concessions, because we've been talking a lot about seller concessions and DTI that are negotiated closing costs that we usually ask for in a contract, which with the market kind of correcting and getting back to pace of not the extreme we've been experiencing, we do have more opportunities to ask for closing costs now in transactions. So that's good.
That is correct. The market is changing a little bit toward the buyer to help out with some of those costs. It is happening, and I am seeing that in some of my loans. So yes, that is correct.
So this program gives the buyer opportunity to ask for closing costs and have this portion considered for forgiveness.
That's correct.
Okay.
So with the, I want to go in detail more about the 3.5 forgivable loan. So that's strictly with to help pay with the down payment. Also, that both of the programs are in the form of a second mortgage. However, with the forgivable program, if you make 36 consecutive payments, the down payment will be forgiven. So you don't have to do it. So I actually had to ask the lender, well, what if the customer is late on one of the payments? Then they simply said that the 36-month count starts over.
Okay.
So you essentially don't have to pay for it. And say you get to the 30 years and you still hadn't gotten to it, but the loan is paid off at the end of 30 years, you just have to write in a request to have it written off, and they'll write it off. So ultimately it will be forgiven.
It has an opportunity to be forgiven. That's awesome.
Yes.
Okay.
Yes, and so that really helps the lower income individuals. Now there is one catch. I had a couple recently. This particular program, the 3.5, it does have a income limit, and we use the federal HUD website to determine that. It is determined by the by county and the median house income. So in this particular situation, they lived in a certain county where the median household income was like $73,000, but they were not able to qualify because their income was at close to 100. And so they were more than 115% of the county that they were moving into. So I could not qualify them for the 3.5, but they were eligible for the 5% repayable because there is no earnings limit on the 5% repayable.
Okay.
So that was the income limit was based on the median housing income for the particular county that they're in.
That
So
is
it's going to
correct.
vary whether we're talking about Elmore, Watauga, Montgomery, Tallapoosa.
Yeah,
So,
depending on where the house is, I go into that federal website
okay.
that's published by HUD every year, and I look up the county average household income, and that couple or the borrowers, they have to be below 115% of that county median household income.
115%. Okay.
Yeah.
All right. So you said the 5%. So we have also opportunity, a different product that provides 5%. So
yes. Okay. And so with the 5%, not only do we pay for the 3.5 down for the down payment, there's an extra 1.5% that can go toward closing costs.
Okay.
And or the prepaids. So essentially, you could actually get money back on this one. if say you get seller concessions, you could actually go to closing and come back with a check in your hand in that instance. So that's the major difference. Some more mortgage loan logo is the total loan, the loan to value, and the CLTV, complete loan to value. So the complete loan to value for the 100% with the 5%, because you're going over
Right.
over the value of the house by 1.5%.
Okay, gotcha. And so this one, what are the terms then on paying this one back?
Okay, so with this one, you do pay it back within 10 years, and it is 2% higher than what the first mortgage is. So say, for instance, your first mortgage is at 5.8%. Then your second mortgage is going to be 7.8%. And once again, it'll be amortized over a 10-year period.
So you're looking at a slightly higher rate to get that upfront assistance. That so and that 2% is still going to be upon that down payment amount borrowed, right? So you're not paying 7% interest on the loan amount. You're paying 7% interest on the second loan amount that was assisted for the down payment, right?
That's correct.
Okay.
That's correct.
Okay. So it is a slight difference, but it does definitely put you in a position, like you said, there's opportunities for concession where you can. I like the way you guys have this position. There's a window of opportunity.
Yes.
So that's what's important here is our opportunities to get you involved in a plan, even if you don't have all of the cash, but you meet the other criteria that can put you in a home today. So I really like this. There is a window opportunity. We may have to, put it on a term for a repayment on a down assistance program. Or like you said, you have the options of the forgivable, but that opportunity is there. And I'm excited about the program. I'm excited about educating future borrowers what is out there. And I look forward to working with you so that we can present this window of opportunity to our customers and clients. I'm excited.
And I'm excited to be working with you guys. So I do want to give one more example. So say somebody wanted a $180,000 house. That means the 5% second mortgage would be $9,000, and so they would pay that $9,000 off within 10 years. Now, another important point is I try to encourage my borrowers to try to pay off that second mortgage a little bit sooner if they can, because you have to pay off the second mortgage in order to refinance in the future if you wanted to
I was about
refinance
to
your
ask
home.
the question. That was my next question. So, like,
we think alike.
right? What are the refinancing opportunities? Because we know that we're going through changes now between rates rising and what they have been over the past couple of years. But we also know as professionals they're still historically low. But like, what we don't know what the next 5 years will bring, and what advantages. So what you're saying is that they would have to do a payoff to refinance.
Yes, essentially, okay. Yes.
Okay. Yeah, I was wondering about that too, because sometimes people on the FHA mortgage, when their credit scores get higher, and then they can refinance on conventional, especially if they've got their under that 80%, so they can get rid of the the MIP, the mortgage insurance premium. So they would still need to pay that off first.
Yeah, normally you're not ready to refinance until about 3 or 4 years after the previous transaction. And so if you can pay off that second mortgage in 3 or 4 years, that'll be perfect timing if the market lends itself. Of course, we don't know what the interest rates will be in 3 or 4 years, but if they are lower, just be prepared to finance or refinance. But if the rates are the same, then you don't have anything to worry about. You just down to one mortgage.
Yeah, that's like what Chanel and I have been talking about, is that this is still a good time to buy, because the interest rates, that we saw at the beginning of the pandemic were just, I hate to say ridiculously low, but I can't think of another term for it, unprecedented.
Right.
What is now is the more normal, I guess you would call it. And so it's still a good time to buy. You don't want to hold off thinking, well, I'm going to wait for rates to drop. I mean, they fluctuate a little bit, but there's no forecast for any, interest rate drop anytime soon. So,
but this, like we're here though, because like what we're saying is that window opportunity, because if interest rates and trying to save a down payment were your two issues, so this opportunity gives you to put that down payment assistance in play. And then, we have time to reevaluate, save some money. So as things progress along, because you don't like the housing opportunity is still now. So you don't want to miss it thinking that, okay, so many changes, I can't do it. I mean, you want to get with a team that can fit you into the right program, discuss the whole big scope of picture, because you don't want to hesitate on, an essential need. Like if you're in a position, credit where they are ready and a need to buy a house, we want to make sure that you understand all of the options that are out there, and don't get overwhelmed with all of the talk. Because I hear a lot of people and a lot of posts about, are we going to crash, or are we going to do this, but we really need to just stay focused and like evaluate any options that we may have that will give us the opportunity to move forward in the market. I just keep wanting to repeat window of opportunity here.
and absolutely. And even if your window is not right now, let's say that you need to work on your credit. Talk to Mr. Patton here. He will help you out, even if you're a year down the road, because you need guidance.
Absolutely.
You need guidance if you're willing to put the work in, then all of us can come together and help you, help make that happen. That dream of home ownership.
Well, right. You do not have to go at it. We like for our customers to know you don't have to go at it alone.
No.
We don't know it all, and we work in the industry. So please don't think we expect you, the homeowner or the potential homeowners, to know it all. We have to work together as a team to make this process work over and over again.
Well, I have to say this. I am so excited that you were able to join us today, Ms. Patton. And I know that I'm going to personally invite you back now on this live, because you have some more information. I like the renovation loan, and I think that is another opportunity. So I'm inviting you now to come back and talk to us about the renovation opportunity, because I feel like with the past market, sellers didn't have to work that hard, and we kind of overlooked some opportunities that could have been rehabbed within your program that could fit. So I'm excited about that. So do you promise to come back and give us some more information?
I definitely promise to come back. I look forward to it. The 203K loans are or I should say rehab loans, are a great opportunity for homeowners, because that gives you a heads up, because you have less competition. Because the housing market is definitely competitive right now. So if you're looking to do a 203, a rehab loan, then that's an advantage for you.
And I think I think like what you said, the housing market has been so competitive. So it was like a lot of people got frustrated, and not with all the things and opportunities and options. I think the rehab is, I've worked the rehab before. It can be a lot, but I understand that you have a streamlined process now. It's kind of upgraded over the years. So I look forward for you to come back and talk to us about it.
Thank you so much for the invitation.
Thank you.
Well, everybody, as you see on the ticker across the bottom of the screen, there's our phone numbers. You can also comment below if you have any questions. Just reach out to us, and we will be more than glad to get you started on the process and answer any questions that you may have. So thank you again, Chanel. Thank you again, Walter, for joining us today. And everybody on Facebook, hope you have a fantastic day.
Absolutely. Thank you, guys.
Thank you so much.
So good. I look forward to speaking with you again. All right.
All right. Bye, y'all.
Bye-bye.